Okay, guys, I'm about to go to market on a scalp. A bit light on the job for us. Flick this over. What we can see here, it's pulled down heavily, push, push, push into this. Now, if I drop it over into an hour, we can see what it's pulling against. Well, it's pulling against this particular one here. So I'll be altering the moves from there to there to come onto the 50, which is a key pivoting point. So that's where I'm going to buy. So it's a 9 pip buy. I'll show you that in just a second. Bang. Right. It's into market. That's our target point. I've just got to do a couple of things for the guys in the squad. So I'll let this play out and then I'll explain what it was that I was doing. Okay. Okay, guys, that's the job done. Now, really, it's very, very simple. But one of the things that I try to do all the time is be fair with the guys that I look after in the squad. And the way I do that is I tell them what I'm doing before I do it. It's not a signal service, but it really keeps me accountable. Now, it's up to the guys what they do, but I also track their trades as well. So this morning, the guys, if we come in, they're having a bit of a hard time of things, of one thing and another, which is fine. Sometimes the markets are there to trip you up, and that's why I try and help. So if we come in the trade tracker, you'll see here at 8 o'clock, I told them exactly what I was going to do in that trade you've just seen. Now, that's also in the updates here. Now, here, you'll be able to see the strength. So what we can see is the pound is particularly weak against JPY at the moment, and it's on the floor, but they're both losing ground. Now, the pound was at the floor completely here, was the weakest. Now, what that tells me is it's not necessarily that it'll continue to sell off, but it'll tell me there's movement because they're both having a hard time of things. But it also tells me it's not going to be as big as you think it is. All right, hence the scalp. Now, they already see that, and then they can see this here, which tells them. And then on the top, it'll actually tell them what I'm going to do. So it'll be the state of play of the market, what the high time frames are doing, what the medium, what the low, whether or not it's going to be a trade I'm going to buy or I'm going to sell, which is here. And it'll tell me whether it's going to be a scalp, a good trade. If it's a good trade, I'll go to one of my standard strategies, sort of like Goldeneye, etc. And it'll also tell me roughly what to target. And then I've got a sort of a little rule set. And that's also available for the guys. Well, the bias section is the strengths mine. But the bias section, there's a tool that works it out exactly the same, so you can do it yourself. And I just think it's a good thing. Now there we are, it's popped, but it's a weak market. It could easily come back on itself. It's also at past 8 in the morning. Now I always let sort of the first 15 minutes, 20 minutes settle themselves down a little bit. I don't like trading out the gate on the open. But if we pull this back out, we can see exactly what this trade is all about, and I get also why it could be a bit scary. As it pulls down and pushed up, it then fell off the cliff. Right. Any reaction like that will have a strong reaction, and that strong reaction came here. Now it already pushed up to the 50, rejected, bounced off this level, but still had volume to the upper side, and that's what we see in here. Now, it was a reasonable assumption that if it was pushing through, it'll look for this level. Well, if you're unsure, the best thing to do is trade sort of conservatively, which is what I do. And that's exactly what's happening here. Because what if that just pulls up and then continues to pull down, because this has had a lot of volume in the downward motion, and it could well be looking for the base of here. Well, if it's looking for the base of there, that's a hell of a drop. So again, be conservative. And that's what trading is to me. It's always about being conservative. You know, I call it trading on the back foot. And what it means is I'm always defensive. Keeps my win rates very high, but more importantly, it keeps my bank not too bad. Now, I get asked all the time, well, if you're that good, why don't you put the farm onto the trade? Well, if I put a huge position on, it's all well and good when it works for me. But what about if it doesn't? Because I like to think I'm good at this, but I'm not brilliant. You know, I'm not by a long shot. You know, I've still got a 20% sort of failure rate. You know, I hold my win rates above 80%. It's high 80s at the moment. But that still is a 1 in 5 chance that this thing could go tits up. Well, if it goes tits, well, talking of tits, well, you have got a good set. She always comes in and excites me at the right time, doesn't she? Well, I was having a moment there.
You forgot what you're doing again.
Well, you have that effect on me. I do like you. You know, crazy cow that you are. Anyway, so yes, that's like 1 in 5 that it could go wrong. So I'm not a gambler. So my theory is always this. I'd rather trade small in relation to the account so that if I am in trouble, one, I can agree to it. But secondly, I can also get myself out of it. You know, how's that? Well, I either kill it and accept it, or I can stage into it and sort of get out on the bounce. Different way. It's a different way of managing your trades. It's ROI version as opposed to RR version. But if you want to say it, drop in the squad. We're happy to have you. Catch you soon.